Thanks for staying with us on the news at 1. Let's take a look at your market news now. Asian markets retraced healthy gains made in recent sessions as investors took profits and some investors' feathers got ruffled as Chinese authorities moved to crimp risks in the financial system. The Japanese market was closed due to a national holiday. Over in Hong Kong, stocks ended Thursday sharply lower, with the Hang Seng falling back below the key 30,000 points mark. The Hang Seng index fell 1.0%. Mainland China stocks got hammered, this as Beijing authorities stepped up their deleveraging campaign. The Shanghai Composite Index slid 2.29%. Wall Street stocks were little changed on the previous close, this ahead of the market being closed today for Thanksgiving, with some investors bemoaning the fact that Washington had gone quiet on tax reforms. The Dow Jones Industrial Average rose by 0.2%. The S&P 500 lost 0.08%. while the Nasdaq Composite added 0.07%. Now for more on the markets, we cross to Nompumelelo Siziba at the Johannesburg Stock Exchange. Nompumelelo, we're hearing from two credit ratings agencies tomorrow on South Africa's credit rating status. Is this having any effect on the markets?
Thanks very much, Nzinga. Well, yes, obviously the markets are eagerly anticipating what's going to come out from S&P and Moody's tomorrow. We are seeing that the rand has weakened somewhat relative to its close yesterday. To what degree that is related to the anticipation around the ratings agency, or whether the Reserve Bank is going to keep rates on hold this afternoon, I can't be sure. But I think there has been a lot of stuff in the mix in terms of anticipation and speculation, and definitely the ratings agency's move tomorrow is a big factor. If things go the wrong way, we could see some analysts say we could see up to 90 billion, 100 billion rand sold out of the South African economy, that is, bonds being sold off as a result, because people who are not mandated to invest in junk status instruments will have to just sell out. And that would be massive. That would mean a massive depreciation in the rand, which has terrible implications for inflation. And this afternoon, it's expected that the Reserve Bank is unlikely to do anything with interest rates because there's so much uncertainty as to what will happen tomorrow and beyond. In terms of what's happening in global markets at the moment, we see that there's a general market, general global sell-off, on global equities, and people are expected to trade rather cautiously as the United States is out today on Thanksgiving and the Japanese also have a national holiday. Let's take a look at the indicators. Well, I'm joined by Anton van Heerkerk. He's from NEFG. Thanks for joining us, sir. It's been a while.
Thanks.
Good stuff. Now, global equities generally on a downer today, and that includes the all-share index as well. And as I mentioned, the US and Japan not playing in the game today. So I suppose it's going to be rather subdued activity for the rest of the week.
Yes, so for tomorrow and today, we expect subdued activity, as you said. It's mostly because of liquidity issues. Liquidity is quite low on days like these, on days like Thanksgiving. So that's the main reason for this.
And up until this point, of low liquidity and so on, what have been the key drivers for global markets?
Well, it depends on what you look at, but at the moment we saw the UK come out with the autumn budget yesterday, and there were some positives, some negatives. The positives were that they decreasing fiscal debt to GDP, or their fiscal deficit to GDP from 8% to around 2.5% over the last 5-6 years, and they're expecting it to go down to 1%. Within the next decade. So that's the positives, but the negatives are that they're expecting productivity growth, which is the main measure of the GDP growth, to come down from 2% to 1.3%, so not good at all. And I think this is sort of the drivers in the market at the moment.
And that, I mean, when you paint that scenario, it does kind of bring out a lot of questions, doesn't it? Because if your productivity is going to go down and you say your budget deficit's going to go down, your budget deficit should go down because you're getting increased growth and you're managing to bring down that deficit as a result of it.
Yeah.
But how can you do that if your productivity is going down?
Yeah, no, certainly that's a problem we're looking at.
Indeed. Now, presumably the fact that the US markets are factoring a 100% chance that there's going to be a rate hike in December in the United States, presumably it makes it almost impossible for our Reserve Bank to contemplate making any move on interest rates, more so because tomorrow is a trigger day, possibly, if people do decide to sell off South African bonds.
Yes, so we know the rating agencies have their decision tomorrow. I think it's very important for all of us as South Africans to look at that. I think the market expects Moody's not to downgrade, so that's a positive. 75% of market participants expect this. And on the other hand, we have the S&P and market participants, the S&P to downgrade us to junk status. But all in all, this won't be that bad for us. The thing is, the global bond indices take into account both Moody's and both the S&P's ratings. So if we look at that and we don't get a downgrade from Moody's, we won't get a massive sell-off in bonds.
Oh, so the Fitch rating, Fitch downgraded our local and our foreign debt to junk. So
yes.
Their rating doesn't count, is that what you're saying? Okay.
No, so they don't really look at their rating as much as they do S&P and Moody's,
Oh,
because
right.
that's the bigger rating agency.
Okay, cool. Now, tomorrow is Retail Black Friday Day, and it looks as though retailers are really gearing up for consumers to come to the party. Do you think that they're going to come to the party, that is consumers? And based on what you've been seeing with retail stocks, how badly does the retail sector need this?
Okay, so for a consumer, this is an amazing day for all of us. We have a chance to buy our Christmas presents at half price, at 60% downward prices. So I think for consumers, it's amazing. But when we look at retailers, it's a bit of a mixed bag, because in the last year, they've been very depressed, and I think they need this for revenue growth. But the problem for me is you're selling stuff at very discounted prices, and your gross profit margins are having an impact on that. So, and it's not a good impact if your gross profit margins go down. And I think all in all, it won't be that good for South African retailers. A day like this.
Doesn't sound very good. And then very lastly, because we're running out of time, I see PPC came out with interim results. They talk about group revenue up a pedestrian 1% at 5.18 billion rand. Their headline earnings per share, though, up 36% at 19 cents. And of course, this is a stock or a company that has been being courted by several companies who want to take it over. Your thoughts quickly.
Okay, so we're very happy with the 36% growth in headline earnings. We still see the company as being a little bit expensive. It's trading at around an 18 price to earnings ratio. And then we really hope they can get a proper offer for the company. You know, I think this will maybe boost an offer, but looking at South African cement growth, it's not amazing. African cement growth is amazing, but you know, you have a lot of competitors in the market, so that makes it difficult. But let's hope they can get a good offer from potential competitors.
Indeed, and I suppose fundamentally it's a pretty good company because it's a development company. In Africa, we're always going to need concrete, cement, etc., etc.
Yes, I'll say that for the African business, not so for the South African business, because competition is really, really stringent here. We have Sepaku Cement as well, and they've been taking a lot of market share from PPC in the last few years.
All right. Well, thank you for your insights and thank you for coming back after such a while. Well, that was Anton van der Kirk. He's a portfolio manager at NEFG. After a short break, Nzinga has more business news for you.